Rakesh, you can mute everyone, all the participants, and allow only the host to unmute, and maybe towards the end of the session, if the panelists are okay to take questions, and if there's any time, then the audience can be answered as well. Thank you.
Yeah, we are live.
Hi, everyone. We just want to make sure to let you all know that this event is recorded. And if anybody has any issue with that, please do let us know. That is with IPV and the panelists. If not, we can continue. Good evening, everyone. I'm Nishani Manohar, the Executive Director of IIT Madras Alumni Association. Very warm afternoon, evening, morning to everybody over here. What's special about these virtual programs is that we're able to engage with a global audience at such ease and bring the community together over different events and different programs that has helped us reach out to more and more alumni over the last few years, especially post-COVID. I'm very thankful to IPV for putting this together, for putting this panel together. In the past, our collaboration with IPV has been great. We've been collaborating with IPV over the last couple of years, and I have noticed and understood the amount of interest that our alumni members have in IPV, what IPV has to offer in terms not just being part of their if they're direct stakeholders, but also as an audience, and also about also what's nice about IPV is they're trying to educate everyone and very inclusive about everyone's needs, wants, and demands. So thank you, IPV, for doing this. Today is a special event. We have everyone on the panel who are all alumni of IIT Madras. That is something which we haven't had in a while. So thank you to all the panelists, and thank you to IPV for putting this together. I'm quickly not going to take much of your time. I'm going to introduce our moderator for today, Mrs. Neha Misra. Neha has become a friend over the last few months, and it's been great interacting with Neha. Neha is currently the CEO of Finlit Project Services Private Limited. She is currently the Joint Secretary of the IIT Madras Alumni Association. She has more than 11 years of experience in technology, finance, and has worked for corporates and startups in India and the USA, including working at Wall Street, New York. In addition to this, Neha is a global speaker, having spoken at multiple international platforms like the Dell Women's Entrepreneur Summit, 10X Thrive Conference, Women Tech Conference, Code of America, and many more. Neha is passionate about the fintech literacy, sustainable finance, and has worked with GBA, DMS, IIT Delhi, the Linux Foundation, and other international organizations in bridging the gap in adoption of sustainable finance and fintech literacy through her work. She is currently with Green Artha, heading work and results-based climate finance and investments. Neha is a member of the IIT Madras SIG on Web3 and fintech, a mentor for IIT Delhi Innovation and Incubation Center, Google Internet Accelerator, and the Oxford University Women in Business, and has featured in the Hindustan Times, Times of India, and other various allocates of the UP Gaurav Sandman, CIIPWC Top 100 Women in Innovation, and the Fiki Flow Outstanding Entrepreneur Award for her world. Very nice to have you on board, Neha. It was such a pleasure to introduce you to our audience today. I'm going to hand this over to you and for you to take forward this panel discussion. Thank you.
Awesome. Thank you so much, Nishani, for that really generous introduction. Really excited to be here this evening facilitating this amazing panel on angel investing, which is a partnership between Inflection Point Ventures and our very own Alumni Association, a place that makes us feel like home even after we've graduated and been away from the institute for so long. So thank you very much, IIT MA and IPV, for putting together this fascinating panel on angel investing. As someone in finance and understanding the need for startup growth investing, and also looking at angel investing as a diversified option for investing, over the last 3 to 4 years, we've really heard people talk about angel investing as a buzzword. But what I'm most excited to hear from our panelists here today, all of them really distinguished and esteemed in the work that they've been doing, is decoding the nuances of angel investing. What are the things that work? What are the things that don't work? What is the right way to keep your money protected, to de-risk your investments whilst garnering returns? And in addition to returns, helping foster the innovation ecosystem in and around us. So with that, a very, very warm welcome to all of you for this program this evening. May I now take the pleasure to introduce all of you to our panelists. Our panelists include Usha Paliath ma'am. She's an IPV investor and IIT Madras alumni. We have Kumar Vikalp, who is also an IPV investor and IIT-M alumni. And we have Professor Prabhu Raj Gopal, who is a professor with us, and he's also an advisor for Nirman. I'd love to go into detailed introductions of all our faculty members and the panelists. But before that, let me take a brief detour and introduce all of you to what IPV is. IPV, or Inflection Point Ventures, is an angel investing platform with an investor base of over 9,000 investors, which includes HNIs and some of our top level CXOs. Their extensive portfolio comprises 190 plus startups across 46 diverse sectors. At IPV, their mission is to democratize angel investing by offering an end-to-end facilitation platform for angel investments. They achieve this by curating extensive, high-quality, and most compelling deals, ensuring that the investment journey on both sides for the investors as well as the investees is both accessible and rewarding. Thank you, IPV, for the work that you do. And we at IIT MA are very proud and happy to have partnered with one of India's most trusted angel investment networks. With that, I'd love to introduce our first panelist for today, Kumar Vikalp sir. Kumar Vikalp sir is a senior from the Ocean Engineering Department at IIT Madras. He is now a portfolio manager in emerging markets, corporate debt, at DWS Investments, part of the Deutsche Bank Group and Europe's second largest public asset manager based out of Frankfurt in Germany. Prior to this, he's worked with Goldman Sachs Asset Management in Bangalore and Reliance Infrastructure Limited in Bombay. He completed, like I said, his BTech from IIT Madras and subsequently did his post-graduation from IIM Lucknow to pursue his passion in financial markets and investing. He also holds the CFA charter. His personal investment journey, whilst it started in 2006, but really took off in 2020 as he was determined not to waste the crisis and utilize it for the pursuit of financial independence. He's done a bunch of different investments, and during our conversations with him, we'd love to know about his interest in disruptive next-gen technologies, which include AI, health tech, drones, clean energy, climate solutions that are easily not available in the listed space. He lives in Frankfurt, for those of you, and we were just talking about catalyzing the ecosystem of the IIT-M alum in Europe. He's based out of Frankfurt with his wife and 6-year-old daughter and loves to read, travel, play badminton, and spend time with family. May I now introduce the second panelist for today, which is Usha ma'am. Usha ma'am has been with IIT Madras from the Chemical Engineering Department. She's been working in the field of social entrepreneurship and working very closely with startups for the last 7 years. Her experience spans areas across finance, funding, strategy, and she's currently involved with incubators like the Nutri Hub, IMR, CCMB, WeHub, IIT Bombay, IIT Kanpur, and TEZ, and with a women entrepreneurship organization called COEW. Usha ma'am has over 20 years of experience in the field of corporate finance and strategy, and with companies like Rumi Education, Airtel, Viacom 18, Larsen & Toubro, and Reckitt Benikser. She's also an active angel investor and has studied, in addition to studying at IIT Madras, ma'am holds an MBA in Finance and Marketing from XLRI Jamshedpur. Thank you, ma'am, for your participation today. Really looking forward to discussing angel investing with you. With that, I introduce our final finalist for the day, Professor Prabhu. Professor Prabhu is a professor of mechanical engineering and an advisor, innovation and entrepreneurship at IIT Madras. He also sits on the advisory board of TechIn, the incubator for IIT Palakkad. He has deep expertise in non-destructive evaluation and structural health monitoring, co-leading the Center for NDE. With over 30 funded projects, 200 plus technical articles, 20 plus granted patents, he is widely recognized for his pioneering work on waveguide ultrasonics and robotics for digital transformation in the industrial and social sector. His work spans the spectrum of sensing and data management, leveraging the latest innovations in analytics and distributed ledgers. He's passionate about service-oriented engineering education and technology translation, working closely and creating market linkages with companies, agencies, societal bodies, and taking these innovations to the field. In his quest, he's also co-founded several startups, so we're really excited to hear from that perspective as well. And at IIT Madras, he is advisor for innovation and entrepreneurship and the faculty in charge of the pioneering Center for Innovation, the pre-incubator Nirman, and convener of the Institute Innovation Council. And his interest lies in sensors, design, and robotics. Welcome all of you. We're eager to hear personal stories, insights from your personal investment journey as an angel investor. And with that, I'll start with the first theme for the day. We're curious to know what an angel investor's journey is like. So first, ladies first, Usha ma'am, could you please share a memorable moment from your journey as an angel investor that had a profound impact on your perspectives on angel investing as an asset class?
I got invited into angel investments by a couple of friends, an ex-boss and a couple of friends. And initially I was a little hesitant because, you keep hearing, this was about 5 years ago. And at that time, it was not a big thing. Angel investment was still not a big thing. It was still something that was new. So I invested in something, I'll not name the company. And I invested because it had all the buzzwords, right? It said AI, it said, AI, ML, and it said technology, and it said, I'm going to solve something. Learned my lesson when I realized this. I got some money, most of my money back, but learned my lesson that if you don't understand what you're investing in, don't invest in it, right? And I think that's true for most asset classes. If you don't understand what you're investing in, don't invest in it. And that was something very memorable for me. But that also helped me understand that if there is a risk, there is also a return that can be made in this class, right? And I cannot do it on behalf of a friend. I need a professional set of people who understand this sector, who understand what angel investment is. So then I took some time out, understood what angel investment is, what it entails, what it requires, and all of that. And then I started working on started angel investing again. It took me 3 years after that first investment. It took me almost 2.5 years to come back into angel investing. But that's the journey I took.
That's fabulous, ma'am. I think, in finance, we've all burnt our fingers in the early days, which brings us to the next question for Professor Prabhu. And like ma'am said, understanding the space, due diligence, screening is very important, understanding how to identify what startups should I invest in, which are the promising startups beyond looking at the buzzwords that ma'am said. So what is the criteria that you consider before making an investment, Professor Prabhu, and how do you sort of arrive at that criteria?
So I would perhaps be sharing my experiences as a startup founder and perhaps not as an investor. And also maybe, putting on the shoes of some investors based on what feedback they have given in investing in some of my other startups as such. So definitely the thing that is most important, I would say, is the founding team, and what is the kind of vision that they have and the values they bring. Right. So many years ago, when I created the first startup, Planis, that came out of our lab, with a couple of BTech graduates from IIT Madras, Tanuj and Vinit. At that time, I had asked my angel investors at that time and said, what tilted the balance for you? Why did you invest in us? And then he says, there are 4 Fs of angel investment. So I asked, what are these 4 Fs? Then he says, founder, 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 founder. Right. So I think that's the kind of essential message. If you can, because ideas and buzzwords, right, they can change, as Ms. Usha also mentioned, right? So just this evening, I was talking to an investor, and this is a person who had studied, investment for his PhD, right? So he made a very scholarly point, and he says between 2006 to 2009, there was so much money put into this area called clean tech, right? And he says 90% of those investments went bust. And they put these investments into 4 different buckets, starting from asset light to asset heavy, right? So he says, except for those 10% that was in an asset light category or a software category, rest of all of the investments, the investors burnt their fingers as such. Right. So these kinds of things can happen. And it is not because those buzzwords are bad, but sometimes the investment also needs to be ready. For example, today we have many factors that were not there back then. Some of them are still taking shape. One is, in any deep tech area, you need a lot of funding support available for an early stage innovation. So that's like a grant support and so on, so that you can generate these very high impact IPs, disruptive IPs. The second thing is the industry must be ready to make the necessary changes in their pipeline to accommodate and make sure that that tech is used and works. The third thing is regulatory support. Right. So you should also, if you can say, I'm going to reduce emissions, but unless there is backing and regulation that is supporting of you, you may not be able to do that. So these factors were not there 10 years ago. And so many of those investments couldn't take off, but today they are there, right? So what circling back, buzzwords are, can catch the trends as such, but ultimately, if you have a very strong team, right? If you have founders with values who share that vision, they can pivot and do something else with those same, vision, but then they could look at another way in which they can move on when cornered and, when boxed to a corner as such. So yeah, that's my thoughts.
No, that's great, Professor Prabhu. You're absolutely right. Buzzwords do come and go. It's about time and space. And we've often heard in the startup space, it's about execution. And execution definitely depends on the founders, on the people that you bank on, because one of the things that people often talk about is putting the money in. Whereas as an investor, the perspective that you have to take is, how am I going to get my money out? So exit strategy is something that needs to be looked at very early on. With that, Kumar sir, what do you think? What did you learn from these successful and some of your unsuccessful? We'd like to know from both sides of the, plate in terms of what worked, what didn't work for you.
Sure. First of all, thank you for the opportunity to be among the IIT-M Janta and amongst fellow esteemed panelists. I guess the most important lesson is, it's still a nascent journey for me. I've been involved with IPV as an angel investor for the last 2.5 years. I've invested so far in 11 companies, of which 10 has been through IPV. One of the high level lesson is to be long on Indian entrepreneurs, and that's sort of from the vantage point of being here in Europe, which for last decade and even more has been going through secular stagnation. India kind of shines as one of the bright spots in a global economy which is drowning in debt, and there are demographic challenges. I mean, there are sort of reforms related issues from a macro standpoint. So in that kind of a geopolitical environment, India kind of stands out from a otherwise kind of a not a very positive global macro scenario. Having said that, I sought out angel investing to focus essentially on disruptive opportunities that are not present in listed space. My lesson from successful investments so far, and it's still a journey, I have not sort of taken out fully from any of my investments, although some of them have gone through successful second and follow-up rounds at a good multiple. The lesson for me has been that I mean, if they're solving a fundamental problem that creates a sort of a positive demand supply kind of a backdrop, preferably having some kind of a regulatory industry tailwind, as Professor Prabhu mentioned. Obviously, the most important aspect is the founder, and hopefully, founder is solving the problem, not just is good at solving the problem, but doing it in a 360-degree or a holistic way. In terms of addressing related problems for the client or the customer. To give an example, I mean, one EV as a service mobility service company which was incubated at IIT Madras that I invested in is doing end-to-end a service in terms of focusing on product per quality, delivery, logistics, as well as analytics. So I think that kind of a customer experience creates a durable competitive advantage, and probably becomes part of a winning combination that helps you stand out and withstand even a crowded market, sort of from a competitive landscape standpoint. So yeah, I mean, the founder is the most important aspect. And then another lesson is to know yourself in terms of your own investing journey. Probably have a framework for investing, areas that you're passionate about, areas that you feel that you have good skills in. And in terms of avoid is probably avoid fads and fear of missing out. Generally ends up in tears. And talking about founders, preferably founders having some kind of an experience to know what not to do, and that helps avoid costly mistakes in an illiquid marketplace like angel investments, and especially in a down market cycle when capital is scarce, so survival skills are more important. Yeah.
That's great, sir. You know, what you rightly said is team, customer, all these things become very important. One of the nuances of investing, whether you do listed space or unlisted space, is you're putting money in spaces which is supposed to generate returns for you whilst you're not working actively in that space. So it's also a journey, like a learning trajectory or a learning journey, whether it is an industry, whether it is a specific sector. And that it stems from, you know, what is the technology? How will it grow? How will it commercialize? How will it scale? So what I wanted to ask you, Usha ma'am, I'm sure in the process of investing or working alongside these founders, understanding, you know, things that Kumar sir said, what's working, who your competition is, how is the industry evolving, what is the total market, you know, is there enough market for this to scale? What have been some of your key, I would say, non-financial, you know, wealth that you probably garnered with the experience, and how has that affected the relationships that you've probably built with that experience?
So as you mentioned in your introduction about me, that I work as a startup mentor and a trainer with a lot of incubators, right? So one thing that I have learned is to learn anywhere and everywhere from everybody, right? So whether initially when I started attending, for example, IPV has weekly, presentations from founders and from IPV and all of that. So I started just attending them to understand what each person is doing. For me, it was just a question of understanding what different people are doing what is the kind of startup ecosystem that's there, and who are the people doing what. And each place I learned something new, whether it was technology or whether it was the way they did the business, a different business model, what works, what doesn't work. And especially when you start attending sessions when they're talking about why they are selecting a company or why they're not selecting a company, right? And at that point, you start understanding what kind of business models, at least most people think it works, right? It's a democratic process. And that helped me develop my own theories of, what startups should do, shouldn't do. What are the things that they are missing? Having been in the industry for almost 20 plus years, you basically know how a lot of industries work, right? And a lot of information is, you gather the information that you require. But this is a different world. And you need to do with a lot less, a lot more, right? A lot less, whether it's resources in terms of finances or if it's anything else. Excuse me. So what I especially try picking up from each person is how they have done smart business, what I call smart business, right? How have they smartly solved issues? How have they smartly done things? So these are the things that I have picked up, and I use them with my other startups. That has helped me. In fact, one of the compliments I receive from a lot of the startups that I mentor is, you make connections when there seem to be no connections.
No connections.
And that is something that I've really learned through this journey of being an investor and being in the startup ecosystem, because I see connections because I've seen connections somewhere else. And if that connection can be made, maybe this connection can be made, right? So how do you make connections for different things? What kind of simply the amount of information that is available in the ecosystem, you just have to reach out to somebody. So I have met a lot of people. In fact, my network has grown multiple fold after I became an investor myself, because you get invited to events, but then more importantly, you get to learn from people, understand these things, and you build your network, you build your information, you build your knowledge, and which makes you a better investor, I think, at the end of the whole thing. So that is what I have done. And that has really helped me when I work with startups as a mentor. And I'm a finance and a strategy person. So especially when it comes to marketing, when it comes to all such other things, I have learned a lot more. And I have understood if there is a problem, there is a startup somewhere that is trying to solve it. So you just need to find that startup where it is trying to solve that problem. So when I have a startup with a problem, I find a startup which is solving that problem. And I have learned to make connections that way. So that's something that I've also learned.
Right. No, that's great. I think, as the network grows, you find that there are so many people working on synergies that can probably be aligned, with each other. And if you're not an expert at something, if, for instance, I'm not an expert at marketing, find somebody who is good at it. And that's how you grow a business. When you're running a startup, it's not possible that you do everything on your own. So delegation is also very important. So with that, Professor Prabhu, what I wanted to ask you was, there's people like me, there's younger people, or like people who've not been actively involved in the angel investing space, eager to deploy capital with the intention of getting a financial return out of it. What's my IRR going to be? How will I get there? What is the time that it would take for that IRR to come out? So what I wanted to ask you, what guidance or what advice do you have for individuals who are trying to, get into angel investing, and telling them at the same time that it has to be a patient journey? You cannot expect that the money starts coming in from day one. It's patient capital that goes in. So along with what are the resources that they should probably explore in the pursuit of knowledge, and the time frame that they need or to get those financial returns?
I think it's a brilliant question. A lot of young people do want to consider angel investing. And as you rightly said, there are some barriers, some thought processes involved that may not be known to them. Right. So I would say, like a very good financial manager, always hedge your, investments. Everybody would tell you that. So the proportion of that depends on, your personal perspective. So, for example, for young people, I would say, and I am also not out of your generation. I think generationally we belong to the same sort of cohort, we can say. This would be my personal philosophy also, in the sense that there'll be some investments into real estate, some into things like jewelry and stuff like that, some into stocks and shares, some definitely into mutual funds, and then a portion of that also goes into startups. So I am an angel investor in some of the startups as well. And this is how I typically look at my portfolio. Now, why this hedging is important is because these are, as young people, our savings are not a huge, large amount, right? So these are very hard-earned savings, and we must, as much as I am an advocate for startups, right? I am a startup founder as well. I know that these are very risky investments. Risky from not from the point of view that they are going to sink. If you make a very judicious choice, for example, IIT Madras, at IIT Madras, we boast that 80% of our startups survive, right? So they're not going to sink, perhaps tomorrow or something. But risky in the sense that this could be capital that is locked up. Say tomorrow you want liquidity for a urgent situation. You cannot encash this money out as easily as you can encash an FD or a real estate. Also can be a challenge, but you can perhaps encash it with some ease as such, right? So that is a risk that you have to be aware about. Now, what are the typical returns? That depends upon, within the deep tech as well, there are a number of different subsectors. But I would say typically, it also depends on what kind of multiplication you're looking at, right? 3x return or 5x return. Conservatively, on an average, my observation is that you can get up to 3x returns in a time frame of 5 to 7 years, right? So that is a very conservative estimate. You can, of course, perhaps get a 3x in a 3-year time frame, right? But on an average, I'm seeing that you get it in about a 7-year time frame as such. Okay. So for young people, I would say, look at startups, do your own due diligence. I would say it is always nice to go in together with a cohort. So for example, like an IPV model or a model where you have a few others doing it together. I would also personally would like to invest in a round where there is an institutional, for example. I'm not saying that angels are individuals should not do it alone, but if there is a institutional also coming along, then there is a prospect that a good due diligence has been done. Some amount of bookkeeping has been checked and so on. So that's would be one of my recommendations, to go in together as a cohort and also see if there is a institutional involved. So I think, yeah, that's the sort of guidance. So hedge your bets, hedge your investments, look closely at who you're investing in. Do not expect a return before 3 to 5 years, and then go together with a cohort and try to see if you can get into a round with somebody who's doing a good due diligence. Yeah.
Oh, thank you so much. That was great, Professor Prabhu. I think due diligence, screening, doing it together as a community, understanding so that there's more than one person looking at a deal, that really helps. And that's why community-based investings, are able to generate better returns as opposed to somebody just doing it, on this side. So I wanted to ask Kumar sir, can you tell us one specific instance? So like with an example, I say you invested in a certain company, they did well or they didn't do well. What was the key takeaway from that experience? And did you also do it the community way or did you do it on your own? We'd love to hear from you.
Sure. Now let me give example of IPV, because I think they because of having such a large network, they naturally attract a huge amount of deal flows, and why bother elsewhere, really, to be honest. I mean, personal capacity doing due diligence is quite difficult, if not impossible altogether. So talking about examples, I mean, several examples actually, but I mean, essentially coming from the aspect that I had no clue in terms of how transformative some of these startups are sort of coming out of India in terms of kind of technologies or solutions that they are bringing, which are at par with probably anywhere in the world. but doing so quite frugally, I would say. So a couple of examples. One, sort of a AI-focused medtech company, which is disrupting sort of a medtech space, which also involves one of the IIT-M amongst the founders, although it was incubated at IIT Bombay. So what they're doing is using AI and machine learning to interpret X-rays and CT scans, so much so that the accuracy is better than average sort of a radiologist. Currently focusing on B2B market, so having a very low cost of customer acquisition, focusing on tier 2 to tier 3 cities in India currently. So really transforming the healthcare sort of a landscape, especially in a country like India where penetration is so low, affordability is an important aspect. So that kind of a I think transformative work that is happening out of India, being brought to investors by the likes of IPV. I'm firstly happy to know that such opportunities exist and feel inspired to be part of it. Hopefully, financial reward will follow in due course of time. Another one that also inspired me a fair bit was genetics focused company that is focusing on precision medicine, coming more from a preventive medicine aspect, targeting lifestyle diseases, focusing exclusively on the Indian genetic pool, which is not being done by any other company in India, which is what they claim. But just to know that there are companies that are sort of focusing on such disruptive technologies and which are so transformative, really, that was an eye opener to me. Yeah.
Right. So you're learning about the journey, learning about the technology as you're investing. So it's pretty much an entire experience. It's not just about putting your money and parking it aside. So that's great. I'll come back to the IPV advantage, but I wanted to ask. We've often heard, and especially one of the challenges today is on social media. There are so many people who will approach you saying, "I'm an angel investor." But then how do you filter, from a startup perspective, how are people filtering that, these are the platforms that I should be looking at? So Vikalp sir, in continuation of what I asked you, if you had to say, this is a common misconception. This is not how angel investing should be done. Or, if there's a startup who's looking for money from angel investors, this is what they should be looking at. Or as an angel investor, this is the myth, this is not something that actually happens. If you could just share one pearl of wisdom, that would be great.
Sure. No, angel investing is risky for sure, and one has to understand the reasons why one is getting into it, the kind of opportunities that one is looking at, and then put obviously a target, like what kind of capital one should put into it. As Professor Prabhu mentioned, it should ideally not be more than 10-20% of your capital. Preferably the lower if you don't really have the experience. Yeah, that's from that aspect. And before you can run, I mean, probably you should learn to walk, in the sense that I think the takeaway for being part of this kind of a forum is that I mean, every week there are 2 or 3 companies that are presenting with such a huge plethora of literature. The due diligence that they do is so thorough. So I think the learning opportunity should not be undermined. I mean, to me, the most important investment one can do is in oneself, really. Yeah, I mean, there's several myths. Sure.
No, that's great. What I was saying is, like, in the listed space, we always say, start with index funds, start with passive, and then you slowly go your way down to small caps and mid caps and micro caps. And don't think of these as bets. These are something that has to be calculated. Professor Prabhu was saying it has to be hedged, it has to be diversified. In order to do that, Professor Prabhu, for someone who is just entering or is keen to enter, but doesn't really understand what could be, the ideal way to do it. What is your thought on what, how they can overcome these perceived barriers to angel investing, or are there any barriers to angel investing?
A lot of barriers are mental barriers, I would say, because there is perceptions, right? There is misunderstandings and so on. Often, if you are investing from your own pocket, it's your savings. The thing you're worried about is, as I said, loss of liquidity or loss of the whole investment itself, right? So I would say the first thing to do is to be engaged with the startup community, right? So at an angel stage, I would say that actually a lot of angel investors, angel investing gets successful if, the angels can get involved and also make a difference. This, I'm saying that with a lot of responsibility, in the sense that at the angel stage, it is not just, giving a check to a startup, it is also giving yourself to the startup, because, they really do not have the ability to hire big consultants. Early stage startups do not have the ability to onboard super talent as well, because they may not have the ability to pay for all of that. They may not be having networks and connections as well, right? So I have found that very successful angel investors do a couple of things. One is that they are investing in areas where they have networks, right, where they can make some connections, make some headways, pull off some leads. So they're doing that. And the second thing is that they are also devoting some time to, upskilling the startup founders, because a lot of startup founders come with a passion, they're experts in the technology and so on, but their go-to-market is something that may not have been fully figured out. So I think it's the role of the angel investor to also make sure that there's a little bit of, upgradation in the understanding of the founders over there, work with them closely, and also make these connections and, open some doors for them. I think that's very important in an angel stage investment as opposed to any other stage. Yeah, that would be my understanding.
Yeah, that's great. I think, you have to walk the talk with them and not just like preach and go. So, Usha ma'am, I wanted to ask you, because I know that you are an IPV investor. I'm sure there must have been apprehensions in the beginning. I'm sure even the process, sometimes for someone from the outside, how convenient is investing with IPV? Or if you had any challenges in your investment journey, did IPV step up and help you? What was the process like? If you can help us with perhaps some of the challenges and how they were addressed.
So as I said, I made one mistake and then I became a tortoise and hid in my shell. And it took some time for me to come back. So and this is something that I tell all my people who are interested in angel investment also, take your time, understand it. I totally agree with Prabhu sir, that unless you understand what this field is about, don't just jump in. So take your time, understand what's happening, listen to a few. I took 6 months to understand, literally only listen. I took the IPV membership and I just listened. I didn't invest in one single thing until I was ready to invest. I took 6 months just listening, right? And once I did that and I understood what would be my interest areas, because you listen, as he was saying, you listen to 3 or 4 pitches every week, right? You start figuring out which are the areas that you want to work in. Where do you want to invest and what is it that you're looking for? You start also seeing news from them, where they're making money, where they're not making money, what's happening, so all of that you start picking up, and then you start making your portfolio. And following up on Prabhu sir on how do you approach angel investment, right? One thing I would agree with is don't get into this unless you have already had at least an investment journey in stock market or something else, right? So you understand how valuation works, how ROI, what are those terms and these things. Some of us have learned it in sometime in MBA and then we've forgotten it. But you get back to it, you understand it, you learn it, and then you take it forward from there. And one thing with IPV that I found very interesting is, one, their due diligence is meticulous. right? Which was one of the reasons I started investing again with them, because for me, they gave me the confidence that what they are doing, they know what they're doing. And one thing with IPV is there are enough of us who invest, and there are really good startups. You get into a kind of there is a kind of a fight to get into the investment group. But whenever I faced that challenge and I've reached out to them through my relationship manager, they have, especially recently, I've just invested in a company, and unfortunately, I was not in time to register for that this thing. But then I reached out saying that I'm really interested. Is there a possibility? And they got back to me, and the relationship manager solved the whole thing. It made it very easy, very convenient. The paperwork is taken care of. I don't have to worry about the paperwork. I'm not sitting and looking at share ka certificate mila hai kya, all of that small things that you have to worry about if you're investing outside. Those things are taken care of and made very comfortable. And another thing that I like about IPV, they have got some, which I take from Prabhu sir, is that they have something called as Let's Grow team. So as an investor, when you invest, they also start immediately after the investment, they start something called as a Let's Grow team. So they pick up the investors and they ask, anybody want to mentor any of these startups? And if you become a mentor, then of course, you get information regularly, but more importantly, you get to know if you can help. And that links, because most of the investors are CXOs and, people who have had certain experience and who are well connected. That helps a lot of these startups get a lot of links, a lot of additional information, things like that. For example, some of the startups didn't know there was a lot of government schemes which would help them market, right? Something that, having worked in the industry, we knew. So, just telling them that, you could get money for going for exhibitions, whether in India or abroad. Just that information could help make them save almost 2.5 lakhs, 3.5 lakhs per exhibition. So you can imagine. And then that turns out into it's a rolling game. So IPV, one advantage you have is there is a group of people working with you to help the startup succeed. So that's one beautiful thing about IPV, and that reduces a lot of challenges that are there when you're as angel investor.
Well, that's great. That's quite the hand-holding experience or the community experience, like Professor Prabhu was saying, you do it together with people, you do it in a structured way. There has to be processes around it. And like you said, ma'am, thank you for sharing that, the term sheet goes on its own, the share certificate comes, you're only parking your money. So all those things are taken care of. Just like, one of my closing questions for all of you, and I'll start with Vikalp sir, is how is, like ma'am said, that this is the approach that IPV follows. Is it different from other angel investing platforms, or have you had like other experiences? Is it better, or what are your thoughts on the IPV experience?
Yeah, no, I have not had experience with any other, but as I think of how processes should be in terms of like best practices, I do quite like how the processes run at IPV. I mean, both in terms of accessibility. I mean, being accessible to investors, founders, the community of many thousands of investors, participants. So the collective wisdom of the crowd. There's probably no better due diligence than that, on top of a very good quality due diligence that is already done by the team of experts from IPV. They have a pretty good app actually, which is a great interface in terms of being part of all the discussions, looking at your portfolio of companies, keeping track of all the upcoming events, startups. And then one thing I also like is that I mean, despite extensive DDs, they invest alongside the investors for every investment, so there's no conflict of interest. So yeah, I feel quite satisfied simply by virtue of the fact that their processes don't leave a lot of questions to be asked, at least from my perspective.
Yeah, thank you. And last but not the least, Professor Prabhu, what has been your, maybe if you could give us an example or a case study of a startup that you invested with or associated with through IPV? What are some of the things that worked? How was the experience? Were there challenges? How were they resolved? If you could just talk us through that.
So I have not been associated with IPV formally.
Okay.
So,
But as otherwise, like, what can you give us an example of, some challenges that a startup faced and an angel investor perhaps came in and, like ma'am said, gave them the guidance that this is how you need to bridge that.
Indeed, I will give a couple of examples actually. Planis was the company that came out of our lab first, a company that I've been associated with over the years, also as an angel investor as well, right? So, I think the journey of Planis develops underwater robots for inspection of marine structures. Would have been very, very checkered and difficult without the support of angel investors, which for us was Kiritsu Forum, Chennai, and a number of our own IIT Madras alumni actually. Dr. Rajan Shrikant, S. Gopal, and so on, who were also part of the IIT-M Entrepreneurship Forum or IIT-M EF. So it helped that Chennai happens to be a maritime city, and a lot of people here have worked in port sector in some way or the other, actually. So many of our angel investors actually had connects to ports, terminals, a lot of these kinds of areas which were essential for growing those initial customer base that was required for Planis. And that's the role of the angel investor. We've received a lot of guidance and support, opening doors and connects that happened over the years. Now later, I would say, we got connected with Mr. Chris Gopalakrishnan and his, as an institutional, it has been a very valuable, association. They bring in some perspectives in terms of, exits and returns and, what investors look for as well, that have benefited us over the years. Tough journey. There have been very difficult, periods, especially, for example, when COVID happened, right? So in May 2020, we didn't know how to pay salaries because although we were owed payments by a number of people, but nobody was able to retrieve their money because of the lockdowns and so on. So there were dark moments when the founders, at night, we connected and many of them were weeping, like, how do we pay salaries? We're going to have a meltdown of the company, literally. So in that dark time, IIT Madras Incubation Cell stepped in. They helped us with some support that really helped us, get over that, very challenging phase. So, so the role of angel investors, the role of our early backers, cannot be just, understated at all in where we are today. And today, post-pandemic, the company has bounced back really with strong support from the oil and gas sector, particularly Reliance, which is, some of our own connects as such. So this is where I'm talking about those connects, the financial support, the deep networks that are beneficial for a startup to grow as such. Yeah.
Thank you so much, Professor Prabhu. As we get into the final section where we'll take audience questions, if you had to define angel investing in one word and not angel investing, what would that be?
Passion. Exactly your passion. So
that's a great one.
Has to sync with your personal passion. Whatever.
Awesome. That's a great one. Usha ma'am, what do you think? If you had to give one word for angel investing?
I would agree with Prabhu that it is passion, but I would also add understanding.
Awesome. So passion plus understanding. And now we're getting to the end of the formula. What about you, Vikalp sir?
Impact.
Impact. Amazing. So passion, understanding, impact, exciting, opportunity is what I would like to add to it. And it just, comes into this amazing ecosystem that can not only like create new opportunities, build new products that you personally cannot, but somebody else is building, and you are part of the process. And it's just such a unique journey to be a part of, learning about innovative business models, teams, hedging your risk. So it's so much of a wholesome experience. So thank you so much. I had a great time learning from all of you. We'll take a few questions from the audience, which I saw a little bit early on. Some of them were asking what the minimum investment size is. There's one that I read, I think somebody sent it to me directly, and we discussed this very briefly. Buzzwords should be really refined and not looked at in a way that this is the exciting opportunity. AI, in fact, in my role, I sit on the Startup India Seed Fund Committee, and I've seen people say AI in Windows where it is not even required. So what do you think? Have you had, incidents where opportunities may have perhaps not synced with the buzzwords, and, anything that has been outside of the angel investing experience with IPV? Anyone who wants to? It's an open question.
So let me just say this. I have become very wary of the word buzzwords. And what I have started looking at is, you tell me, what are you impacting? What are you changing? Right? So I don't want to hear AI, ML. I don't want to hear blockchain. I don't want to hear all of those words. Tell me, what are you doing? For whom are you doing? And how are you doing it? And those are the three things. If you can answer me correctly, I'm okay with looking at you with a little more interest. If you cannot answer these three questions, then no buzzwords.
Awesome. And then somebody's asked, so what are the top three things to look out, when, like you said, what are you doing? Who are you doing it for? And how are you doing it? So that's perfect in terms of assessing businesses. And I think Sandeep just asked that question. Anything else that you'd like to add, Professor Prabhu? What should an angel investor look out for? Market, opportunity, business model, anything specific that you look out for?
Yeah, so I would say, it is very important to look at the go-to-market strategy of the startup. Is there a specific pain point that they have chosen to solve? And how well are they solving it? And are they doing it in a very unique manner that's going to get them a lot of traction, give them a moat? I think that's the key point to evaluate as such at an angel stage.
Okay, awesome. Vikalp sir, anything else? GTM, business approach, market, anything else that you'd like to add?
No, I wouldn't add any buzzwords, but yeah, I mean, I think the nature of how critical is the problem that they are solving, and that sort of ties with sort of a target market size really, and if you're doing it in a frugal manner, what is the traction of the products in terms of experience from customers, that. And lastly, I think from a founder's perspective, founders should be responsive, responsive to hear feedback, to communicate. That also helps detect some kind of a early warning and be able to address challenges. Otherwise, it becomes just a recipe for failure in an already kind of a challenging landscape.
Awesome. Thank you. I think one of the questions is, and this is again open, Abhijit is asking, how is investing in India? Is it different from the Silicon Valley, or, any thoughts on the West versus India experience?
I've not invested in startups in the West. Both are very different markets. Traditionally, I would think that one associated US as sort of a globally in the developed market as one of the growth markets. But still, I think when it comes to India, obviously, I mean, given the demographics, many reforms that are there, and under-penetrated infrastructure, and sort of many sort of segments really, I think the market opportunity is probably much more lucrative. But you need to evaluate every investment from a bottom-up perspective, really. I think otherwise it becomes. I mean, yeah. Otherwise it becomes like a recipe for disaster, really. I think you have to do your own due diligence, research, be convinced about the investment.
Awesome. Ma'am, you were saying one last.
So, two things. One, the US market, as Vikalp said, is a lot more developed market. So you have enough people investing in enough things, right? In India, I think the angel investment network is just started off, and there are just about enough people who are getting into it right now. But I think just looking at the sheer number of startups that we have, some 90,000 startups last year or something like that, you need a lot more people willing to put in the money at the early stage, especially the angel investment stage, right? And who are willing to take a little bit of risk, who are willing to put in a little more effort to help the startup grow, right? And I think that stage in India is still growing. The other thing is, in India, it's about investment on scale. US, I don't think they, or anywhere else actually in the world, nobody looks at anything for scale. In India, just the 1.4 billion people, I keep telling everybody, you've got a market in India, right? Well, with 1.4 billion people, there's somebody who will buy something. But how many people will buy it and at what price will you buy it? Unless you get those two right, your investment journey could be a little bumpy, is all I would say.
So that's great, ma'am. I think commercialization is a huge part of business success. You know, it's good to build a technology, but it's also important that, you know, it is scaled, and only then does it become a viable business, and only then does it become, you know, an exit opportunity for an investor. So with that, yeah, the QR code is up. Please scan and you can avail a 45-day free trial membership with IPV. They also have another offer. I think there's one gentleman in the audience who's raised his hand. Rakesh, are we open to taking questions from the audience by unmuting them, or would you like them then?
I'll make them unmute themselves.
Yeah, this another gentleman is also called Rakesh Roshan. Yeah.
Hi. Hi everyone. I have a question from Prabhu sir, because he mentioned about deep technology. So is it like the deep technology startup is only for the people who have big connections? Because let's say if I'm building something for bigger companies or the big enterprises, or in your case it was something related to sea and marine, right? So how do we enter the market, especially when we do not have much connection? Let's say for us, it is quite easier because we have such a big alumni network as well. But what if people are actually from tier 2, tier 3 colleges and they do not have that kind of background? So how do they evolve even after building their product? Just wanted to hear from you.
I think there is some misunderstanding. I spoke from a perspective of an angel investor. Right? If you are an angel investor, it would be nice if you can bring in some connections to the startups you're investing in. That is why it would be nice and wise for angel investors to invest in startups that are close to their professions, close to their passions, so that they can bring in those perspectives, insights, networks, and connections to the startup. So that is what I said, and I hope that clarifies.
Yeah. Actually, you also mentioned from founder perspective, right? So that's what I just wanted to mention. Like
I
also from
founder perspective. Sorry.
No worries. So this session, we are going to do it from the angel investors perspective. Rakesh, I'd request you take your question offline in the interest of time. We're already 5 minutes over. Thank you so much, IPV, again, for putting this together. IIT-Ma and the entire IIT-Ma team for facilitating this for us. Our really esteemed and august panelists, Usha ma'am, Prabhu sir, Vikalp sir. I had a great time listening to all of you here, speak about your personal journey, and it's often about sharing. And I think IIT Madras as a community is so open to sharing that we love the idea of coming and sharing that experience with other people. And knowledge only grows once you start sharing it. So really, really grateful to all three of you for coming and sharing your personal experience, working with startups, building on their journeys from your angel investment experience. We hope that this session was valuable for everyone who tuned in. For those of you who couldn't join us today, I'm sure the recording would be shared with you, and you can also find it on the IIT-Ma official channel. Thank you so much. With that, I think I'd like to hand it back to Aditya and Rakesh, and we could close out this session. Thank you very much, everybody. I had a great time.
Thank you, Neha.
Thank you.
Thanks. Thanks, Neha. Thanks again to all of the panelists here today. And thank you to everyone who has joined in and shared their Friday evenings with us. I know we've run past time, so I wouldn't want to hold anyone up further. So we have the QR codes here for the 45 days free trial membership for IPV and the 20% discount if anybody would like to avail. Apart from that, I have no other comments, apart from a big thank you to all of the panelists, as well as Neha, the moderator, who I think did a wonderful job. So thank you, everybody, and have a great Friday evening ahead. Thanks.
Thank you so much, Aditya. Thanks, Neha. And thanks.
Thank you. Have a good evening. Bye-bye.
Bye-bye.